U.S. economist at Citi. He joins me now. Andrew, great to have you on the show. Your reaction, first of all, to this 25 basis hike, pretty much the expected. How do you think the Fed will move next?
I think what Jerome Powell is trying to do here is just keep options open. And that's what you tend to see central bankers want to do, keep all the options on the table. It really goes back to that context in June, that kind of strange meeting where Fed officials decided not to raise rates, but then raised their forecast to project that they'd have to raise rates 2 more times this year. So one of those rate raises came today. That was well expected by the meeting. You hear Chair Powell being really non-committal about whether September is going to be a hike, whether it will be a pause. I think with the recently softer inflation data, it probably will be a pause. But there's still a more serious question out there, which is, in the medium term, are rates high enough to slow down the economy enough to bring inflation down? I really don't think we can answer that question yet. I think Chair Powell knows we can't answer that question yet. So you're seeing him kind of keep all those options open.
Yeah, he doesn't want to put himself in a position that we have to reverse. And I mean, we heard from the former Fed chair, Ben Bernanke, who basically said that the July hike might just be the last one. You're not confident that that's going to be the case, given the data that we have been seeing?
I think they'll probably continue to hike. Now, if you continue to get inflation reports like the one that we got in June, that's enough evidence for Fed officials to pause, maybe pause for an extended period of time. But in the near term, some of these base effects are going to go the other way. You're basically going to be comparing prices to lower prices in the past. That's going to mean that year-on-year readings increase. And then we have some really interesting emerging dynamics. One that you just mentioned, oil prices moving higher, gasoline prices moving higher. That's headline inflation. Fed officials tend to care less about that. But underlying inflation, house prices, we're starting to see house prices picking up faster. That could be another reason that Fed officials want to come back. And remember, their guidance has been that they will hike one more time. Markets are seeing that as kind of a 50-50 proposition. September is probably a time for them to look at that again, pause again, like they did in June. And then November is when we think that next rate hike is coming.
But it's looking more positive, perhaps. At least that's the sense I'm getting, that we may be looking at a pause at the end of these hikes in the next few months. But what about core inflation? So something that Matt talked about, our correspondent, Marty Egan, taming that core inflation. How do you see the Fed targeting this?
So that's where there's really an issue in terms of lining up the macroeconomic theory with where the Fed would like things to go in their forecast. The way that you get core inflation to slow is to slow down general cost inflation in the economy. And that usually comes with a substantial weakening in demand and a loosening in labor markets. Now, the good news about the U.S. economy is it's proved very resilient to higher interest rates. We're still getting around 2% growth. We're still growing jobs at about 244,000 jobs per month on a 3-month moving average basis. So that's great news for the U.S. economy. But if what you want to see is core inflation slow down, that strong demand for services that's been pushing up prices slow down, house prices slow down, you usually need more of a cooling of the economy. So I think that's the medium-term issue that the Fed may be facing here in terms of, are policy rates really high enough? Where Chair Powell is trying to go is to say, well, we'll just keep policy rates at these levels for longer. Credit conditions will continue to tighten, and maybe in time that will bring down core inflation. So I think there still is a real discussion about whether we're really going to get core inflation back to 2% in the near term.